Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. 27th Powell's big speech today at the top of the hour. Also, a couple of news pieces to come in here. So let's go through the news really quick. But I mean, this Powell thing is a pretty big deal. Could be like one of the most consequential moments in monetary history for the next 10 years, but it could also just like be nothing. But let's see what he has to say. Markets seem to have pretty big expectations. Let's see here. Lobo says sending a mug to Germany is for $5. Wow. Well, okay. That's cool if you get it. I'll look and see if we can get a better option for you. Okay, charts yesterday. Insane move in the E-mini. Look at how high. I mean, just on a relative basis, it was a really big up day yesterday. And here at all-time highs when so many people think that we were already at ridiculous levels, right? Well, yesterday, I actually took a little short here, and then I took a long during the stream. Afterwards, I messed around with it a little bit. I think I fought it somewhere in here, and it didn't really go, and I scratched it, and then it took a long. And I don't know. I got a little bit out of this, but I thought the whole thing was crazy. I couldn't figure out what was going on. Now, apparently, Salesforce had a really good day, and that just led to a complete frenzy in Salesforce and the NASDAQ as a whole. So that's a big point. But also, I mean, the market is expecting not Colin, but Mr. Jerome Powell, Chairman Powell, to say stuff about inflation. And if we're getting inflation, then that means that all stocks are going to be have higher monetary value, even though your dollar is going to be worth less. So that's why they're going to move us up. Treasury is also a really strong 5-year auction. So it's particularly here in the 5-year. They really came up here. 10-year ZB, not as much, but the whole complex is higher. Also note 2 and 10s flattening a little bit. Oil had a pretty good day yesterday, but has since given those gains up. And you know, there's this whole thing with the hurricane coming through. It's going to be a category 4 hurricane, so that seems to be affecting oil. Gold took a hit initially, but then rallied as the rest of these complexes did, and copper giving up a little bit of its gains overnight. Okay, so we've got some continuing jobless claims and GDP growth second estimate here. So we will get a little bit of movement here. I can see that the market is positioned long at the moment. So we got about 10 seconds here. Open up my text to speech in the meantime. I don't think I'm going to take a trade off of this initially. Okay. Okay, jobless claims. Actual 1,006,000. Forecast 1 million, so pretty close. Continuing 14.53, forecast 14.45. Okay, growth rate is minus 31.7% versus an estimate of minus 32.5%. So the GDP estimate was better than expected. The jobless claims were about in line. And market's not really moving off of it. So I made a change to one of my scripts. I think that my workspace didn't it's not taking hold because this should be giving me a different reading. I'm gonna refresh that so my E-mini thumb here won't be moving for a moment. So Powell's speech is in 40 minutes, right? And will there be a live stream? I'm not sure. Yeah, so I think that the market is being a little slow, partly because the release didn't happen like right on the nose, but also I don't know if they really care about the growth rate that much at the moment because we all know it's really bad, and if it's different by a percent, I don't know if that's really a huge deal. And the jobless claims were about in line, so well, the currencies aren't really moving much on this either. So I think this is really a case of everybody is really more concerned about Powell's speech. Yeah. Why is it not working? It was working yesterday when I tested it. Oh, I know why. Bum, ba, bum. Did it with the one indicator, not the other indicator. Then we should make these greater than or equal to, less than or equal to. Dum, 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 dum. That. Oh, I have the wrong screen. You don't want to see that. You don't care. Oh, whoops. That's a really dumb mistake right there. Okay. Let's try that again.
Yuri says, did you see gold right now? Dollar.
Well, I mean, I have gold up. I don't really see anything too unusual happening with it. Let's move down a few dollars, maybe. All right. I think we are almost all in ready here. Let's pull up a Forex Factory. I want to see what they're going to say about Powell's thing. So one of the things that I was noticing was that his
Yuri says, beginning of something, tongue out.
could be there were CNBC was billing his speech as an overview of the Fed's new inflation outlook, but I'm just seeing that it's just the okay, due to deliver a speech titled Monetary Policy Framework Review at the Jackson Hole Economic Policy Symposium via satellite audience questions expected. That was a good thing that I wanted to know. I don't know if there's going to be like his speech is going to be released at the beginning of it or not. That was kind of one of the things that I want to see. Let's see if Zero Hedge has any information about it. They might be somebody to say. Um, do not see. Well, I see futures dip ahead of Powell's landmark speech, but I mean, they're not that down. Come on. It's pretty quiet overnight, actually. Number of actual positions taken overnight in the E-mini futures was quite low, in fact. Um, okay, so I don't know. I'm sure that my Squawk will probably have a link when that's ready, but I don't know what the deal is at the moment. So, hmm.
Michael Terence says, when is Powell speaking?
Top of the hour. Oh, they are, they are doing a link. They listen. Is Financial Juice listening to me? Because we're just asking that question, and they're like, "Oh, here's the link." It is scheduled on YouTube. Okay. Oh, look, it's the Kansas City Fed. I didn't know they had a YouTube channel. Okay, share, copy. Where are you guys? Here is the link.
Speculator Seth Day Trading says.
I will open it up here and we'll listen to it. So, actually, I think what I will do, well, I don't know how I want to do this. I can vote. No, I think I will play it through because when I watch this on replay, I want to be able to see my reaction to what he's saying. So I will be playing it. I will be streaming it through here. All right. And it is at 9:10 Eastern time specifically. So it's about it's in a few minutes. We still got some time. Yes. Try that. That should fix a few things. Better, I think. An initial number that it gave me before it started reloading all the data at least was better. Wondering if I should put in my historical stuff into the inventory indicator too, so that when I refresh the chart, it doesn't take forever to load it. It will just load it from disk. Because running through with the tick replay and everything is just takes forever. So I didn't want to be sitting here fixing my code, but I kind of really want to change. I kind of really want to get that out of the way first. So I apologize, guys. I wanted to talk about Kyle. Kenosha Kyle. That whole thing. Oh my gosh, what a mess. The politically, I'm starting to think that this is maybe, at least on the right, a significant deal. They are just going wild with it. Well, that's not what it's supposed to be either. Ah, just making a lot of really dumb mistakes in my code. I'm just not very thorough today, am I? I'm putting max where there's supposed to be min and min where there's supposed to be max. Okay. Let's try that again.
Ace Trades says morning.
Good morning, Ace. Did you figure out the YouTube stuff?
Ace
Good
Trades says I did. Thank you.
deal. I like it. Anybody that wants to do stuff on YouTube,
Live
just
Action says
ask.
positioning long off this VPOC attempting to front run Powell. If I don't do it here, we'll have to wait for breakout.
That's a gutsy. That's gutsy live action. I mean, I kind of think that I want to go long. Um, but I'm afraid that this is a situation where I probably don't have a whole lot of edge, right? Like I can't sit down and go, okay, if we change this model about how the Fed is going to act, how does that affect the market, and how much of that is priced in already? And I have no clue. I do know that the market is expecting a lot, so I might, if it's not what's expected and they're disappointed, or it's more than they expected and they really take off, I could try trading it off of that. But anyways, but to the YouTube thing, I am of the opinion that it's a community sort of a thing, and like if there's other people that are streaming or making YouTube videos, then I want to help you out and we build a little community here. It's totally great. So if Ace starts a stream, I would be really excited about it. Aha, that's better. That's a little bit more like what I'm expecting to see. And it should be pretty equal. Well, actually, should be a little biased to the downside. Oh, but it is by about 200. No, I think it's right. I think it's right. So we can just run with that.
Ace Trades says thanks, but my boss wants to do it to make money, so there is that. Drive software sales.
Yeah. Well, the difficult thing with the YouTube is that it seems to me that you don't get a ton of discoverability with live streaming. It's really those one-off videos are the things that really grow the channel.
Ace Trades says okay. I'll check in later. Have a good one.
Yeah, have a good one. Be careful out there. This speech coming up is going to be cray cray. You come in and you got like the Thursday news, you got a GDP number in, and the market just kind of yawns about it. That's like, okay. Be careful about that one.
Ace Trades says we have a ton of videos. They do get a lot of looks.
Oh, that's good. I do think YouTube is a way better way of doing it than like a GoToMeeting or whatever. I mean, there's advantages to GoToMeeting too because there's not the delay and it's easier for people to talk back to you. But we need to do. I tried to do. Didn't we try to do it one day where we would we chat? But I don't think that we did that. But we should try that again. Maybe we could do it. We could do it tomorrow, maybe. Or maybe there's well, let's do it on Labor Day. That's what we'll do. We'll do it on Labor Day. Labor Day, we will still be streaming, and we will do a live show where you guys can come on and you can talk. And I'll let you have your piece and say whatever you want. Okay, so it is showing me different. I don't know how accurate it is. I'm gonna have to like take a shot or something. Take a screenshot and verify that what it's showing me is correct. Well, I can come in here and I can just double check my code. The position is greater than or equal to the minimum level filter, or the minimum level filter is 0, in which case it's off. and the position is less than or equal to the max level filter, or the max level filter is equal to 0. That's the min. Now one is showing the current. Min, max, 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 max. I do believe it is correct now. Oh, wow, that made it on CNN or on the Hill? Okay, so CNN yesterday, they had a fiery but mostly peaceful protests after police shooting was the little tagline that they had on their video. And everybody was making fun of it, and it got so much traction that it's on the Hill now. Oh, I think that's the first time where I've seen like a real mockery of CNN like that and make it to a mainstream news outlet. The Hill is a good news source for politics, guys. Mm. Well, we did get a bit of long positions taken there. Oh, I so want to, just for fun, I want to get in. Well, we still got about 20 minutes. Okay, and the Jackson Hole Symposium is playing music still. There's only 2,934 watching right now on that. I'm surprised. I'm actually really very, very surprised. White House Chief of Staff Meadows and House Representative Speaker Pelosi to hold a call at 2:30 p.m. Eastern Time. Yeah, so apparently the Republicans are working on another version of the skinny bill, and this one doesn't even include direct payments to people. Which I actually think is the right call. Like, they're really quite crazy, the amount of money that they're trying to throw around when the markets are at all-time high, and I'm really concerned that if you just give people more money, that all it's going to do is it's going to end up in in the stock market. So I'm actually kind of glad that they're not doing that. But I'm also like, well, so that's even less money. The Democrats aren't going to go for that. I guess we'll see. So I reloaded it over here in the treasuries, and it's just giving me 0 now. What's with that? Oh, I must be having an issue with the data feed still. It must not be loaded because look, the DOM is it's not changing. Let's try saving the workspace. Uh-huh. Uh-huh.
Salim L says scammed by Rhythmic.
No, it's not Rhythmic. It's it's the same problem it always is my dollar index indicator is crashing NinjaTrader. So we'll fix that. I'm really frustrated by that indicator because it's super effing simple, right? So I'm not sure what can be done about it. I'm gonna have to make a thread. Hmm. Forex Live as one hurricane makes landfall, a new system begins to organize. Man, we're gonna have a really crazy hurricane season, aren't we? I can tell you, I'm really tempted to like make big trades here during this thing, but like I keep telling myself, okay, like I don't think you have edge here. And there's the roll too. The roll I think could be problematic as well. I always have a hard time with the roll. With our new cost inventory basis, I think that that will
Celine
really
L
help
says
us
you are
on the
too smart
roll.
for NinjaTrader. That platform looks like a soggy old piece of bread.
Oh no, it's really a very good platform. It's my indicator, dude. If you just use all of their default stuff, you'll never have problems. Oh, I see what's happening. I see what's going on here. Of course.
Culture Horse says GM Seth you going to have Powell on in the background.
I will. I will. So, I have the video up right now. It's just
Lobo Trader says they will start in a minute according to the YT.
yeah, according to the YouTube, they're gonna start in a minute. He's not expected to speak until 10 minutes in, but we'll see. I'm sure that there's gonna be somebody who's gonna come in and he's gonna give like all the introductions and a bunch of other really boring stuff. So here I have it that it's supposed to start right now. I'll turn the volume on when they're actually doing something. For now, though, there's all this music and stuff. I don't want it to flag the video. It's well produced. Of course, it's all done, but being done by Zoom. Look, they've got S or George has a nice setup there. Look at that. She's got lighting. She's got like bookcases and stuff all set up. I don't think that picture back there is real. Okay. Oh,
Live action says what's up with the bookcase thing, seems everyone is doing it now.
I don't know. Do I need a bookcase? Well, I've always thought that's what I need in the background is a bunch of books and like
Lobo Trader says she
popular
wears that
trading
hat
books.
sometimes, winking face.
Now I feel like it's too cliche. We have to find something cooler. Well, I mean, we've got Yoda. You see this, Esther?
Makina
You've
says
got
had a bad
bookcase.
week
I've
trading
got
this week.
Yoda.
2 of the 3 trades were my fault because I got too confident from a great week last week. The third got taken by the EURSD dip in anticipation of the speech.
Oh, really? That's interesting. Um, much better. I mean, it really comes down to understanding the situation and really knowing if you have an edge or not. So, like with this symposium, this is a tough one because there's going to be a lot of opportunity here, but we might not have as much edge as some of these economists that have like complicated models based on this stuff, right? What was that? She's got a bookcase too. So it looks like she's using a lavalier mic, but it maybe doesn't have it set very well. Oh, you want me to turn the audio on
contribute to
now?
making it more open and inclusive. This year's theme, as you know,
Hopefully
is navigating the
that's.
decade ahead.
Wondering
And
if I
while
should
so many
put
are
a filter on
focused on
this.
navigating the very challenging issues that we are grappling with in the moment, from the pandemic, racial injustice, to the economic crisis, it's important to remember that each of these unfolds in a broader context. And understanding the longer term trends is also essential for addressing today's policies. And so this symposium
Anthony Monroe says good morning,
the
Seth.
decline in
Good morning.
long-term growth on lower interest rates and inflation are as salient for
At
economics
9:10
and in
a.m. Eastern
particular
Time, Fed's
monetary
Powell is due to
policy
speak at the
as
Jackson Hole Economic
understanding
Policy
crisis
Synopsis.
management issues, as
You
we will
can watch this by
discuss
clicking the link that we
during the
have provided on the
symposium today.
Financial Juice newsfeed.
And so to get us started, it is
Da,
my
da,
honor
da.
to introduce the Chair of the Federal Reserve Board, Jerome Powell.
Okay, so that should.
Thank you, Esther, for hosting us today.
Hopefully that'll duck it a little bit when I'm
Thank you,
talking.
Susan, for that kind introduction. Can we turn off the sound in here, please?
Now he's got some books. What are those
Fed Powell is
books?
now currently speaking.
Thank you. The Kansas City Fed's economic policy symposiums have consistently served as a vital platform
That
for
book
discussing
says
the most
Federal
challenging
Reserve
economic issues
Bulletin.
of the day. Judging by the agenda and the papers, this year will be no exception. For the past year and a half, my colleagues and I on the FOMC have been conducting the first ever public review of our monetary policy framework. Earlier today, we released a revised statement on longer run goals and monetary policy strategy, a document that lays out our goals, articulates our framework for monetary policy, and serves as the foundation for our policy actions. Today, I will discuss our review, the changes in the economy that motivated us to undertake it, and our revised statement, which encapsulates the main conclusions of the review. We began this public review in early 2019 to assess the monetary policy strategy, tools, and communications that would best foster achievement of our congressionally assigned goals of maximum employment and price stability over the years ahead in service to the American people.
Oh, look at the treasuries.
Because the economy is always evolving, the FOMC's strategy for achieving its goals, our policy framework,
Fed's Powell says that the Fed will now target 2% inflation on average.
40 years ago, the biggest problem our economy faced was high inflation. The great inflation demanded a clear focus on restoring the credibility of the FOMC's commitment to price stability. Chair Paul Volcker brought that focus to bear, and the Volcker disinflation, with the continuing stewardship of Alan Greenspan, led to the stabilization of inflation and inflation expectations in the 1990s at around 2%.
Dixie, that is moving towards the downside.
The monetary policies of the Volcker era laid the foundation for a long period of economic stability, known as the Great Moderation.
Gold is seeing an appreciation as well.
Brought new challenges
again, off the back of Fed's Powell's expected comments that the Fed will now target 2% inflation on average.
Expansions typically ended in overheating and rising inflation.
I don't know what's going on.
Since then,
over
prior
here.
to the current pandemic-induced downturn, a series of historically long expansions had been more likely to end with episodes of financial instability, prompting essential efforts to substantially increase the strength and resilience of the financial system. By the early 2000s,
Fed's Powell says the Federal Reserve released Fed will target average inflation and put emphasis on broad and inclusive employment. We now seek to achieve 2%, seek to achieve inflation that averages 2% over time, and will offset periods of weak inflation with inflation above 2% for some period of time. Fed places employment before inflation in new monetary policy strategy. They will seek to ensure that employment does not fall short of its maximum employment level.
I think I'm just going to have to delete that indicator for now.
Fed's Powell says it is hard to overstate the benefits that higher level of employment have for racial, ethnic minorities, and others left behind for too long. Shift has motivated
Ben Bernanke's leadership. The Federal Reserve adopted many of the features associated with flexible inflation targeting. We made great advances in transparency and communications, with the initiation of quarterly press conferences and a summary of economic projections, which comprises the individual economic forecasts of FOMC participants. During that time, then Board Vice Chair Janet Yellen led an effort on behalf of the
Live action says it's true Pelosi had only one book in her bookcase, Green Eggs and Ham.
In January 2012, the committee issued its first statement on longer-run goals.
Well, but Powell's got some serious books back there, man. That collection is probably worth a lot of money.
A central part of this statement was the articulation of a longer-run inflation goal of
Culture Horse says, Dovish.
Because the structure of the labor market is strongly influenced by
Look at
non-monetary
the way
factors
that the
can
index
change
is
over.
turned back down.
The committee did not set a numerical objective for maximum employment. However, the statement affirmed the committee's commitment to fulfilling both its congressionally mandated goals.
I apologize.
Kevin Wimmer says, what's up with your robo?
The
Joe Biden stutter update?
was a significant milestone, reflecting lessons learned from fighting high
You might be getting some stuttering because
around the world with
it's
flexible
trying to
inflation
reload
targeting.
a bunch of data right now.
The statement largely articulated the framework the committee had been following for some time. The completion of the original consensus statement in January 2012 occurred early on in the recovery from the global financial crisis, when notions of what the new normal might bring were quite uncertain. Since then, our understanding of the economy has evolved in ways that are central to monetary policy. Of course, the conduct of monetary policy has also evolved. A key purpose of our review has been to take stock of the lessons learned over this period and identify any further changes in
See
our
here,
monetary
Fed
policy
has no
framework
formula
that
to
enhance our ability
dictate
to achieve
average
our
inflation
maximum
target.
employment
Culture
price
Horse
stability
says,
goals.
what is different now is K's?
Our evolving
would
understanding of 4 key
offset
economic
periods of weak
developments
inflation with
motivated
inflation
our
above
review.
2% for some period of time gives the Fed more
First,
flexibility and it
assessments
ties
of
it
the
down
potential
less.
or longer-run growth rate of the economy have
Let's
declined.
see.
For example, since January 2012, the
There's an
median
art
estimate of
there's a
potential
there's a
growth for
target, but
FOMC
they don't
participants
actually
has fallen from
define
2.5%
like over
to
what
1.8%.
time frame or anything like that.
Some
Just
slowing
that they
growth
can
relative
say
to
if
earlier
inflation
decades
has
was to
been
be
low
expected,
last year that it
reflecting
can be
slowing
high
population
next
growth
year.
and the aging of the population. More troubling has been the decline in productivity growth, which is the primary driver of improving living standards over time. Second, the general level of interest rates has fallen both here in the United States and around the world. Estimates of the neutral federal funds rate, which is the rate consistent with the economy operating at full strength and with stable inflation, fallen substantially.
Salim says, oh my God, he makes my lower back hurt with his long sentences.
Real interest rate, or R star. This rate is not affected by monetary policy, but is instead driven by fundamental factors in the economy, including demographics and productivity growth, the same factors that drive potential economic growth. The median estimate from FOMC participants of the neutral Fed funds rate has fallen by nearly half since early 2012, from 4.25% to 2.5%. This decline in
Culture Horse says thanks so still semantics, no real catalyst yet.
Implications for monetary policy.
No, I mean that like they came out and he said we're going to do average inflation targeting and everything kind of moved and then it looks like it's all come back.
Support the economy during an economic downturn by simply cutting the federal funds rate. The result can be worse economic outcomes in terms of both employment and price stability, with the costs of such outcomes likely falling hardest on those least able to bear.
I may have
Third,
to like
and on a happier
completely
note,
rebuild
the
my
record-long
workspace.
expansion that ended earlier this year led to the best labor market we had seen in some time. The unemployment rate hovered near 50-year lows.
Racist says, FYI, there's doubling from the voice that reads comments.
Estimates of its sustainable level.
There is? Oh, I know.
And the unemployment rate captures only part of the story. Having declined significantly in the 5 years following the crisis, the labor force participation rate
I don't think there's a way for me to fix that other than to just read
rising,
out your comments myself.
even though the aging of the population suggests it would keep falling. For individuals in their prime working years, the participation rate fully retraced its post-crisis decline, defying earlier assessments that the global financial crisis might cause permanent structural damage to the labor market. Moreover, as the long expansion continued, the gains began to be shared more widely across society. The Black and Hispanic unemployment rates reached record lows, and the differentials between these rates and the white unemployment rate narrowed to their lowest levels on record. As we heard repeatedly in our Fed Listens events, the robust job market was delivering life-changing gains for many individuals, families, and communities, particularly at the lower end of the income spectrum. In addition, many who had been left behind for too long were finding jobs, benefiting their families and communities, and increasing the productive capacity of our economy. Before the pandemic, there was every reason to expect that these gains would continue. It is hard to overstate the benefits of a strong labor market, a key national goal that will require a range of policies in addition to supportive monetary policy. Fourth, the historically strong labor market did not trigger a significant rise in inflation. Over the years, forecasts from FOMC participants and private sector analysts routinely showed a return to 2% inflation, but these forecasts were never realized on a sustained basis. Inflation forecasts are typically predicated on a natural rate of unemployment, or U star, and of how much upward pressure on inflation arises when the unemployment rate falls relative to U star. As the unemployment rate moved lower and inflation remained muted, estimates of U star were revised down. For example, the median estimate from FOMC participants declined from 5.5% in 2012 to 4.1%.
Well, they're going now. This is the part that they're interested in.
Of inflation to labor market tightness, which we refer to as the flattening of the Phillips curve, also contributed to low inflation outcomes. In addition, longer-term inflation expectations, which we have long seen as an important driver of actual inflation, and global disinflationary pressures may have been holding down inflation more than was generally anticipated. Other economies have also struggled to achieve their inflation goals in recent decades. The persistent undershoot of inflation from our 2% longer-run objective is a cause for concern. Many find it counterintuitive that the Fed would want to push inflation up. After all, low and stable inflation is essential for a well-functioning economy. And we are certainly mindful that higher prices for essential items, such as food, gasoline, and shelter, add to the burdens faced by many families, especially those struggling with lost jobs and incomes. However, inflation that is persistently too low can pose serious risk to the economy. Inflation that runs below its desired level can lead to an unwelcome fall in longer-term inflation expectations.
Have to do it
which in
again.
turn
I'm gonna
can
have to
pull
rebuild
actual
this.
inflation even lower, resulting in an adverse cycle of ever lower inflation and inflation expectations. This dynamic is a problem because
Disappointing.
expected inflation feeds directly into the general level of interest rates. Well-anchored inflation expectations are critical for giving the Fed the latitude to support employment when necessary without destabilizing inflation. But if inflation expectations fall below our 2% objective, interest rates would decline in tandem. In turn, we would have less scope to cut interest rates to boost employment during an economic downturn, further diminishing our capacity to stabilize the economy through cutting interest rates. We have seen this adverse dynamic play out.
David
in other
Rosenberg
major
tweets, what is
economies
this
around the world,
fixation with an
and have
arbitrary
learned
2%
that
inflation
once
goal?
it
In the
sets
past
in,
5,
it
10,
can
and
be
20
very
years, core
difficult to
PCE
overcome.
inflation has averaged
We want to
1.6.
do what we can
The
to
range is
prevent such a
9%
dynamic from
to
happening here.
2.6%, and today is 1%. What exactly is he lamenting about?
We began our review with these changes to the economy in mind. The review had 3 pillars: a series of Fed Listens events held around the country, a flagship research conference, and a series of committee discussions supported by rigorous staff analysis. As is appropriate in our democratic society, we have sought extensive engagement with the public throughout the review.
Okay.
The Fed Listens events built on a
Okay.
long-standing practice around the Federal Reserve System of engaging with
I guess I
community
know how I have
groups.
to do
The
this.
15 events involved a wide range of participants: workforce development groups, union members, small business owners, residents of low and moderate income communities, retirees, and others, to hear about how our policies affect people's daily lives and livelihoods. The stories we heard at Fed Listens became a potent vehicle for us to connect with the people and communities that our policies are intended to benefit. One of the clear messages we heard was that the strong labor market that prevailed before the pandemic was generating employment opportunities for many Americans who in the past had not found jobs readily available.
Right?
A clear takeaway from these events was the importance of achieving and sustaining a strong job market, particularly for people from low and moderate income communities. The research conference brought together some of the world's leading academic experts to address topics central to our review. And the presentations and robust discussion we engaged in
I'm allowed to
were an
send a link.
important
If you
input to
post
our
any
review
links in chat, YouTube
Finally,
automatically removes them.
The committee
If you want to
explored a
post
range of
pictures and
issues that
stuff,
were
you
brought
should
to
go
light
to
during the
Discord.
course of review in 5 consecutive meetings beginning in July 2019. Analytical staff work put together by teams across the Federal Reserve System provided essential background for each of the committee's discussions. Our plans to conclude the review earlier this year were, like so many things, delayed by the arrival of the pandemic. When we resumed our discussions last month, we turned our attention to distilling the most important lessons of the review in a revised statement on longer-run goals and monetary policy strategy. The federated structure of the Federal Reserve, reflected in the FOMC, ensures that we always have a diverse range of perspectives on monetary policy, and that is certainly the case today. Nonetheless, I am pleased to say that the revised consensus statement was adopted today with the unanimous support of committee participants. Our new consensus statement, like its predecessor, explains how we interpret the mandate Congress has given us and describes the broad framework that we believe will best promote our maximum employment and price stability goals. Before addressing the key changes in our statement, let me highlight some areas of continuity. We continue to believe that specifying a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. The significant shifts in estimates of the natural rate of unemployment over the past decade reinforce this point. In addition, we have not changed our view that a longer-run inflation rate of 2% is most consistent with our mandate to promote both maximum employment and price stability. Finally, we continue to believe that monetary policy must be forward-looking, taking into account the expectations of households and businesses and the lags in monetary policy's effect on the economy. Thus, our policy actions continue to depend on the economic outlook as well as the risks to the outlook, including potential risks to the financial system that could of our goals. The key innovations in our new consensus statement reflect the changes in the economy I described. Our new statement explicitly acknowledges the challenge posed by the proximity of interest rates to the effective lower bound. By reducing our scope to support the economy by cutting interest rates, the lower bound increases downward risks to employment and inflation. To counter these risks, we are prepared to use our full range of tools to support the economy.
Hi, Mr. Inflation.
With regard to the employment side of our mandate, our revised statement emphasizes that maximum employment is a broad-based and inclusive goal. This change reflects our appreciation.
I don't know if what he's saying right now is
for
like
many in low and moderate income communities.
Huge change, but
in addition, our revised statement says that our policy decision will be informed by our assessments of the shortfalls of employment from its maximum level, rather than by deviations from its maximum level, as in our previous statement. This change may appear subtle, but it reflects our view that a robust job market can
like
be
here he's saying
without
like
causing
this is a subtle
inflation.
change and things like that.
In earlier decades, when the Phillips curve was steeper, inflation tended to rise noticeably in response to a strengthening labor market. It was sometimes appropriate to tighten monetary policy as employment toward its estimated maximum level in order to stave off an unwelcome rise in inflation. The change to shortfalls clarifies that going forward, employment can run at or above time estimates of its maximum level without causing concern, unless accompanied by signs of unwanted increases in inflation or the emergence of other risks that could impede the attainment of our goals. Of course, when employment is below its maximum level, as is so clearly the case now, we will actively seek to minimize that shortfall.
I didn't say rates will stay low, everything will be damned. I think you are reading a little bit more, you're reading what you want to hear and not what he's saying.
Our longer run goal continues to be an inflation rate of 2%.
It sounds to me like this is largely what has been expected.
Both sides of our dual mandate will be most effective,
and not just what has been expected, like
well anchored at 2%.
When we say,
however, if inflation runs below 2%,
going into this meeting, what was the market expectation for trading purposes, but also going back further, what everybody has been saying that the Federal Reserve probably needs to do.
Households and businesses will come to expect this result, meaning that inflation expectations would tend to move below our inflation goal and pull realized inflation down. To prevent this outcome and the adverse dynamics that could ensue, our new statement indicates that we will seek to achieve inflation that averages 2% over time. Therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. In seeking to achieve inflation that averages 2% over time, we are not tying ourselves to a particular mathematical formula that defines the average. Thus, our approach could be viewed as a flexible form of average inflation targeting. Our decisions about appropriate monetary policy will continue to reflect a broad array of considerations and will not be dictated by any formula. Of course, if excessive inflationary pressures were to build, or inflation expectations were to ratchet above levels consistent with our goal, we would not hesitate to act. The revisions to our statement add up to a robust updating of our monetary policy framework. To an extent, these revisions reflect the way we have been conducting policy in recent years. At the same time, however, there are some important new features. Overall, our new statement on longer-run goals and monetary policy strategy conveys our continued strong commitment to achieving our goals, given the difficult challenges presented by the proximity of interest rates to the effective lower bound. In conducting monetary policy, we will remain highly focused on fostering as strong a labor market as possible for the benefit of all Americans. And we will steadfastly seek to achieve a 2% inflation rate over time. Our review has provided a platform for productive discussion and engagement with the public we serve. The Fed Listens events helped us connect with our core constituency, the American people, and hear directly how their everyday lives are affected by policies.
Ooh.
We believe that conducting a review at regular intervals is a good institutional practice, providing valuable feedback and enhancing transparency and accountability. And with the ever-changing economy, future reviews will allow us to take a step back, reflect on what we've learned, and adapt our practices as we strive to achieve our dual mandate goals. As our statement indicates, we plan to undertake a thorough public review of our monetary policy strategy, tools, and communication practices roughly every 5 years. Thank you very much.
Okay, so that was his speech.
Thank you, Chair Powell, for your remarks and also for engaging in a follow-up conversation. I actually believe that
Sorry, I can hear you. I think I can hear you now, Susan.
Okay, so now he's getting answer
Thank you
questions. This
very
is where
much,
we could
Chair
get
Powell.
crazy stuff, right?
Both for your remarks about the new consensus statement and also for engaging in a follow-up conversation. I believe that this is actually the first time that after the chair's remarks at the Jackson Hole conference, there has been a follow-up question and answer session. And so another first. That I think that's actually very much in keeping with the public nature of the framework review that you just described for us. And so I wanted to commend for that as well. Why don't we just dig right in, and I'd like to talk more about some of the topics that you covered. And I think why don't we start with where you ended up, which is focused on the changes in the inflation strategy that you'll be following going forward. So as you explained to us, the inflation long-term target remained at 2%. However, going forward, you could shift to a flexible average inflation targeting strategy. And while there's a lot of discussion in the academic literature and policy wonks are well aware of what an average inflation targeting strategy is like, I wonder if you'd say more about how you would communicate that to the public. To what extent is this going to seem like a real change?
Well, so the public communication of it is very important, as you point out. And as I mentioned in my remarks, we're well in the Fed Listens events and many other engagements that people don't generally think about inflation moving up as a good thing. There is that we're talking about inflation moving moderately, which is to say the overshoots will be moderate, which is to say not large, and they will for some time, which is to say not permanent or sustained for very long periods of time. So I think it's very important that we get that message out. It's also important that I think that people understand that this is not a formulaic approach. The committee will continue to consider all of the things that it typically considers in making monetary policy, but will aspire to have inflation run above 2% after periods in which it runs for an extended period below 2%, so that we can average 2%. So I think that concept should be well understood, and I think it's the appropriate one. When we began the review, we understood that situation we're in calls for an exploration of makeup strategies of various kinds, and this seems to us to be the right makeup strategy, where undershoots of inflation are not forgotten, but are made up in a way that allows us to to continue to consider all the other things that come into monetary policy, often unexpectedly, rather than trying to follow a particular formula.
Thank you. So one way to think about that perhaps is the way that your colleague, Governor Clarida, has described it. It's more of an evolution perhaps than a revolution. So if I could just
I think that's very fair. Go ahead.
If I could just push that a little further, and we'll come back to the comments that you made about the framework, but with so much focus on the really challenging economic situation, the crisis that we're in at the moment, are there changes in monetary policy that people should expect to see as a result of some of these changes in the strategy that you have walked us through?
So I guess I would just set the stage a little bit. We began the review we announced it publicly that we were beginning a review in early 2019. So and we had planned to announce our conclusions, and indeed we're ready to announce our conclusions in the April or June meeting this year. So most of the work that was done, and there was a lot of work done, took place during 2019. So the review is meant to establish a framework for monetary policy that will guide our decisions for the foreseeable future. It was meant to take into account the learning that we did in watching a full business cycle take place after the global financial crisis. We had seen a full business cycle or close to it, and now we have indeed seen a business cycle. So I think we thought it was time to update. So it wasn't designed to dictate any particular future decision about interest rates or other monetary policies. However, all of the things we do going forward will reflect the changes that we've made to the framework. So I would think of it that way. It doesn't dictate particular outcomes, though, at particular meetings or the timing of those outcomes, other than the goals that we're
so let's
to
come
achieve.
Almost all the way back.
So you mentioned a bit, and I'd like to hear a bit more about this. The rationale and your thinking for launching this review to begin with. You've mentioned that it was launched, of course, 18 months ago, so well before the current context. And I wonder if you'd say more about both what your motivation was for launching this, but also whether, as you look back on what the process was and how it unfolded, if you would have done anything differently.
Sure. So the review is really part of a broader program of enhanced transparency and accountability, really something the Fed's been working on for 30 plus years now. Today surveys show that public faith in large institutions around the world is under pressure. And so I think institutions like the Fed have to aggressively seek transparency and accountability to preserve our democratic legitimacy. And there are a bunch of things that we're doing. The review was the center of that, though. I thought other central banks have done various forms of reviews, not all of them of their broad monetary policy, but some had, and I thought this would be something we could do to get great benefits and also be able to update our framework. And the economic question we had to answer was how to adapt our framework to what we really had learned since the global financial crisis during that long expansion. As I mentioned, we knew that we were going to be closer to the effective lower bound in all likelihood, and had to address that as I described in my remarks. We didn't know how it would come out. I'm very happy with where it came out. I will, if you'll forgive me or allow me, just say for a second that we were in the design process of this when Vice Chair Rich Clarida arrived in the fall of 2018, and there were only 3 governors, I think, at the time. He had the time and really took this on and led it. we would not be sitting here today talking about this without his great leadership efforts in bringing this thing forward. I'd also mention the other members of the subcommittee on communications, which Rich.
Okay, so
Claire,
that was like the
Governor
downside,
Brand,
and they're bouncing
Eric
again.
Rosengren, and pretty much every member of the FOMC, every participant can look at the document and see their own views and input reflected. So, so I think in terms of, I mentioned some of the things. I think there were great gains just in the process of engaging with lawmakers and engaging with the general public on these issues and seeking input and accountability. I think that is a most welcome thing when you do that. And so I think even apart from the gains in the framework, that was something I was quite struck by. The Fed Listens events were just really striking. If you were in Chicago, I think that conference, there were 2 panels of people from low and moderate income communities.
Well, if we wanted to
who
buy
spoke
it, I
about,
think that we could do
you
it
know, the
pretty
economy
safely.
in their lives, and it was just riveting. It was really, that was the highlight of that conference, which of course was chock with, you know, global monetary policy experts. But to hear them talking about what a tight labor market means in their communities was something that none of us will forget. And I think we knew that intellectually, but I think hearing it a lot over the course of Fed Listens, and then seeing the sharing of the benefits of a labor market that's tight, in the sort of 8th and 9th years of the expansion, wages began to move up more for people at the lower end. We saw labor participation. We saw
Markina,
employers,
whatever you posted,
you know,
say
doing
something
lots
in
and
the
lots of
lobby.
things to recruit people who might not have been recruited earlier. So it's a very virtuous thing, and one that I mentioned in my remarks. Will take support from Congress over time too. It's not just about monetary policy. It's about education. It's about training. It's about healthcare. It's about all the things that enable people to get into the labor force and stay there and progress in their careers through the labor force. So I think those are some of the things I take away from the process.
So, I mean, as someone who did participate in at least some pieces of the process, I will also comment on just how public and OPED, as you mentioned, is not thought of as an institution that really does reach out to the public and engage in different ways. I wonder if you'd say a bit more about how, as a regular process, the influence of voices from the public actually does play a role in terms of monetary policy decisions and thinking, because that's a topic I think is not at all well understood by the public.
Well, we have, through the Reserve Bank system,
now gold
we have a unique really presence in communities around the United States. And we're present in not just in the business community, but in educational, medical, through our community affairs groups, we're present in neighborhoods, and we harvest that information, and it goes into a lot of what FOMC participants say. It goes into the research that we do, it goes into the data that we collect. We collect a lot of unique data on diverse outcomes among different groups and that kind of thing. And all of that goes into our FOMC deliberations. In particular, it informs our understanding of what maximum employment really means. So we focus on, at every FOMC meeting, in every briefing, in pretty much all of my public remarks and my colleagues' public remarks in the monetary policy report, we will call out different, for example, unemployment rates and labor force results for different racial groups. Not just because it's the right thing to do, it really does inform our thinking about maximum employment. And so this is something that we're very focused on. These disparities are a longstanding feature of the American economy, and they really do hold us back, as Raphael Bostic so pointed out so well recently. They weigh on the whole economy, and so all of that goes into our thinking, not in a mechanical way, but in our understanding of what maximum employment is. And that's why you saw during 2019, when the unemployment rate fell to 3.5%, well below most estimates of the sustainable rate, the natural rate of unemployment. You didn't see us raising rates or expressing concern. You heard us celebrating that, and you actually saw us cutting rates during 2019. Not because of that, but nonetheless, we weren't hesitant to cut rates because of the very low level of.
Whoa. You weren't hesitant to cut rates?
Just to follow up on that,
Excuse me?
have made some
No.
strong,
The market had to
very
throw a
clear
complete fit
statements about
to get you to do it.
racial and the challenges of economic
Oh, man.
disparities, particularly related to racial inequalities. And of course, we know that many of those disparities are in such clear relief in the current context. And so I'd like to ask you to say a bit more, having explained to us that the employment mandate will be interpreted in a broader and more inclusive way. What else can the Fed do to address some of those really important disparities?
So I would say, as I mentioned, these are long-running features of our economy, which figure into our understanding of the economy and into our decisions. And I would say also that while they're long-standing, the pandemic has really shown that the effects of the pandemic have fallen to a large extent, not exclusively, but to a large extent, on people working in the service economy, in public-facing jobs, and these relatively low-wage workers, and that's been heavily skewed toward minorities, women, low and moderate income community. So, what can the Fed do? So as I mentioned, we do already. If you look at the record, we're doing lots of research around these issues. We're talking about it publicly, and we are talking about these issues publicly, and we're incorporating into our thinking. I think the key thing, though, is that the single most important thing we can do here is to support a strong labor market. And as I mentioned earlier, that is something that we can do, but that is more of an all government, all society project that we could take on forcefully. It can't just be the way the Fed manages interest rates through the business cycle. Although, in other words, it's not to wait until the 8th and 9th year of the cycle to get those kinds of results. We can do better than that, but with other policies. I think so. I think
Bitcoin pumped too, I bet.
Those things that we can do, I think a lot of them we're doing, and we'll keep looking for new ways. It is important to point out, though, our interest rate policies and our other policies affect all Americans and are for the benefit of all Americans. They're just, in that sense, blunt tools, and there are better tools for dealing directly with distributional issues, and those are the tools that are held in our system of government by elected officials and the people who are appointed in the executive branch, who work for an elected official. So it is, as I said, it needs to be an all of government, all of society kind of thing. We'll keep doing what we can do, but I wouldn't. We really need it to be broader than just the Fed, and I think we're sort of doing the things that we think we can do now, and we'll keep doing them.
I'll move it up a little bit.
So
but
it certainly does it have to be a broader effort. In that context, I wanted to just ask you a bit about some of the special programs, the facilities to try to get funds out into the community, in particular in places and for groups that are really struggling. As you know, the Fed has come under some criticism that some of those facilities are not reaching some of the groups that are the hardest hit. For example,
J-PAL summary, we print money. I don't know if it's like really anything changes.
A bit more about whether there are additional things that the Fed could be doing, perhaps in partnership with others in that context.
So we did a lot of, on the Main Street facility, we did a great deal of outreach to community development financial institutions and minority depository institutions and other organizations that represent those constituencies. And so we're doing everything we can to reach those constituencies. Remember, this is a very broad program designed to make loans. So these are loans that we can make. We can't make grants the way effectively the PPP program does. That's really fiscal policy. What we're doing is we're making loans, and the law requires us to have a reasonable expectation that the loans will be repaid. A bank has to keep a 5% piece of that loan. So we are working to reach smaller and medium-sized businesses through that. But I do think there's This is a unique exercise for us. We've never done anything like that. Lending to businesses, I would say we've never done it, but we've never tried to reach out broadly like this, particularly to smaller institutions. We're really not the ideal, we're doing it. We've put more effort and work into the Main Street facility than everything else we've done. It's a very, very challenging exercise. We're making progress there. I think we're getting more and more banks signed up, more and more loans getting made. CDFIs and smaller community banks are in fact active. But it's going to take more than that. It's going to take, more direct aid, I think, to smaller businesses. And I think that's an area where fiscal policy can really do things that it's very hard for us to do. And in fact, the P program has been doing. So I would look to policy for help there.
Yeah, and so clearly it has to be a partnership to have the kind of broad impact that we would hope to see. I do want to talk a bit about the current crisis compared to other crises that the Fed has grappled with.
If
And in
Fed didn't
particular,
want Trump,
one
wouldn't
of
this
the
be a very
questions that
bearish
I get
speech to tank
asked
the stock
is,
market,
to what
the RNC, and
extent,
his
from the
acceptance
perspective of
speech?
monetary policy,
I
is
don't.
grappling with a major recession that's caused by a pandemic.
So again, the thing that I'm kind of seeing is that there are a couple of little tiny details that we're picking up here that I'm not really sure I'm qualified to say what the real consequences of it are. But this is largely what we have expected for a long time.
Beginnings of recovery.
So
recovery are quite different.
People are just trading now. It's when you look at the tape, they're very much positions pushing each other.
Features of
There's not some huge change in expectations coming in here. Oh, they're going to print even more than we thought. Now we really got to buy it. That's not happening.
This really was a natural disaster.
It's just kind of what we were already expecting.
With a banking system that was well capitalized and highly liquid.
It was very much
its risks pretty well.
Informational thing like you should expect.
Of strength. So that's very different. Although we have seen lines emerge in the broader financial system, in the capital markets, for example, under great stress. We've seen something, and no doubt we'll come back and look at those when
I'd still say that the overall story is bullish, but
sometimes required by their government, sometimes
because it was already expected. You can see there, it's not like just going straight up, right?
All around the world, there's no precedent for that.
There's a lot of people probably taking profits on something that they've been long in for a while.
In the financial crisis, so we immediately cut rates to zero. We raised our asset purchases essentially without limit to support market function. We weren't trying to stimulate the economy in the sense that the economy was partially shut down. The idea was not to stimulate people to go out to spend. It was to provide a little bit of comfort, to assure that credit was flowing to households and businesses, and then when the expansion came, to support that recovery and expansion with monetary policy. So very, very different. Also, this business of lending to non-financial corporates and also to
seems to have a really stimulative effect on the stock market for something that's not intended to stimulate the economy.
Financial system, it was of such a
a little comfort, right? Yeah, man. You said a couple of things in here that I'm like, Zero Hedge is going to have a field day with this speech. I'll tell you that much.
For the municipal market,
he's said a number of things that I feel like
smaller businesses
show that he's a little bit in denial about what people think of the Federal Reserve's actions.
It's very different, but I would say this though: so we had the deepest quarter loss in GDP that we've ever had. But remember, the economy was strong back in February, so there's a lot of strength in the economy. The recovery in May and June came sooner and was stronger than expected. So there's still a healthy economy under here, except for this area that's been directly affected by COVID. So if we can keep the disease under control, the rest of the economy can recover fairly quickly. The problem this time is that there's a particular part of the economy which involves getting people together and feeding them, flying them around the country, having them sleep in hotels, entertaining them. that part of the economy will find it very difficult to recover. That's a lot of workers. That's millions of people whose jobs are they're really going to struggle to find work. And we need to stay with those people. We need to support them and help them get back into their working lives, stay in their homes. Congress has done a lot on that. We've done a lot, and we'll keep doing what we can. But I do think it's that's going to be the issue. I think we will get through this period, maybe with some starts and stops, with reasonable growth. But ultimately, we're looking at a long tail of probably a couple of years at least of people of relatively high employment, as people who worked in those industries will struggle to find work. And again, we need to support them.
Yeah, so kind of very different trajectory as you've described.
Right.
So in that context, do you see any role for the Fed in terms of those financial institutions that really do community development?
You know, we're very highly engaged with the CDFIs, the community development financial institutions, and those of them that are banks, are taking part in our programs now. They took part in the PPP liquidity facility, so we strongly support them, engage with them, and the same is true of MDIs. It's I think that isn't where the liquidity shortage is. That isn't where the big problems in the economy are really in the service sector and the manufacturing sector. It's in the real economy this time. The last crisis was really around the financial system and big credit losses. Here we've got highly capitalized institutions, and we have credit problems in the real economy, and we have we have a different situation this time.
Thank you. So we are almost out of time, unfortunately, and I thought what I would do for just our last minute or two was to cycle back to the review, this very public review of the monetary policy framework, and ask if you had any additional thoughts or perhaps the next steps that you expect the Fed to take in terms of moving forward with the changes that you've described for us.
Well, first of all, I'm very pleased with how this worked out. Again, I think it's productive both from the standpoint of just public engagement, and that's always a good thing for an institution like the Fed, particularly the Fed, which has this precious degree of independence. And I think that puts a burden on us to seek accountability, not just go through the motions, but really actively engage and explain ourselves as clearly as possible to the public and the public's elected representatives. So I think the review has helped on that. I think in that sense, it's been a success. I think really the changes to our framework, time is going to tell. And what we do going forward is really going to decide the effectiveness of the changes we've made. I think it's a very promising set of changes to deal with what is a reality of a quite difficult macroeconomic context of low interest rates, low inflation, relatively low productivity, slow growth, and those kinds of things, and a flat Phillips curve. You have to put all that together and see that we've really got to work to find every scrap of leverage in helping stabilize the economy, which is our role. So time will tell, and our actions ultimately tell. But I'm very pleased with you and so grateful to be part of such a great organization where we've really used every part of the organization to advance this project, and I'm really proud to be part of this.
Thank you very much, Chair Powell. It was really a pleasure both to speak with you this morning here, but also I'd like to congratulate you and the Federal Reserve team, a thoughtful and publicly engaged review of the monetary policy strategy. So thank you very much.
Thank you very much, Susan. Good to see you.
Good to see you as well. And now we'll shift to the second session in today's agenda, which will focus on the trend decline in growth.
Why has the trend rate of growth declined? Oh, we don't want that. We don't want it to play that. Posted the screenshot under currencies.
Salim L says I just froze RTrader. What the hell is that platform RTrader? Garbage.
You crashed our trader? You crashed our trader?
MISS's says hee 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 hee.
Well, that's interesting. Okay. So I need to come in and do a couple of things here.
Grease Monkey says our Trader Pro is the worst POS I've ever used.
It's really not a very nice platform, is it? I mean, it just like you just open it up and you're immediately like, ugh, what the heck? Okay. 3510. Wow, really? Okay. It says 3510.
Uzi Knesset says I trial ran our Trader and it felt like Windows 95.
Yeah, it's not. It's awful. $35.
Salim L says I just crashed our Trader for 2 minutes.
Well, it's better than the mess that I've been going through, man. So, do you think now we could try? Can try loading back up our complicated workspace. So I don't have anything sitting over here because I don't. It's my fancy e-mini chart. Oh my gosh, guys. Oh, it's gone.
Salim L says I hate Ninja but our Trader is tops it.
I really, aside from my indicator, which the thing is it's loading like 10 data series, okay? Aside from that, I have not had any problems with Ninja. So, I don't know, man.
Grease Monkey says anyone else using Bookmap?
I
Plan
have a couple
before
of guys
trade
in
says
Discord.
these are difficult days to trade. Unlike you are prepared to unlearn everything and buy the open without stops. Close at end of session.
Right.
RJ Wheels says YM great place to be this morning.
I'm gonna try adding something in here.
MISS's says
There
D.
we go. That
Salim
should
L
make it so
says
that
no
you guys
stops ha ha
don't.
ha ha.
If we're talking
Plan
at the
before
same time,
trade
I'll
says
still be
Bookmap
louder.
is a great tool. MISS's says Microsoft could announce deal to buy TikTok within 48 hours.
Okay, that's interesting. I think I may have overstayed. Well, no, I think I can stay in this. It's certainly coming back. It's probably going to come all the way back to like the 86 area. The Federal Reserve rolled out an aggressive new strategy to restore the United States to full employment and
Plan
lift
before
inflation
trade
back to
says
healthier
assuming
levels.
that's the reason why CEO resigned. Sam T says just a last question, Chairman. What do you think about zero hedge and do you read it? Would be hilarious if she asked that.
That would be funny. I bet you they probably don't. I mean, you got to realize that there's a lot of really good financial information that's posted on Zero Hedge that I personally don't see anywhere else. There's also a lot of garbage, you know?
Yuri says, did you see Gold Grin?
Well, it took off, but it's fallen now, man. In fact, gold is taking
Vlad
new
Stolarov
lows.
says you must construct additional pylons.
I'm going to move that because I want to at least take the 10 points. I don't know what's going on with gold at the moment. Is a little cray-cray. The dollar apparently is not as weak as supposed. I don't know. Shall we attempt to put our dollar index back up? Aha. So the dollar initially fell quite a bit from 93 to 92 and a half and has since recovered back to where it was at the beginning of all of this. Well, I'll try doing it like this for now, and we'll just kind of see what happens, all right? Now,
Yuri says done for today, have fun, Grin.
I'm having another. Well, no, I think I'm going to keep it over here. Never mind. Never mind. I mean, I had that chart that I was showing you down over in the corner. Oh, it took me out. With like the range chart on the E-mini and everything, but that one was kind of a pain in the butt, wasn't it? Well, let's make it. Let's do it. Yes. Let's just be a little bit. Let's just try to be intentionally lighter about it, though. Like, we'll do range chart, one range chart, no tick replay, boxes. Okay. And then we'll add the 5-minute multi-period candles around it. Oops. That's not what we're supposed to do. Let me restart. And on this one, we'll just make it like a box that's transparent or something. Transparent everything. It's coming back quite a bit now, isn't it? I hate that. Fuck, I just did all that work and it didn't. Okay. My bad. You might actually get another long here. Unless this market is turning around. What is going on in gold and the euro? It's all okay. So now let's try adding the other series on there. 5 minute multi-period candles. And range. One range box. No tick replay. Okay. Cool. Okay, so this first one should be boxes, transparent boxes. Cool. This one should be
Salim L says you're great job.
yeah, I saw the haven't really had the chance to completely look at it yet. Okay. This is dark red. This should be like midnight blue or whatever it is. Royal blue. Royal blue, I believe. Well, everything's all negative right now. That's the chart we know and love. Mm-hmm. Nah, you know what? I don't want that. I just want a regular SMA.
McKenna says currencies this week have been extremely weird.
And
Salim L says I only love the Constitution of the United States.
two. Make this one.
McKenna says I am just happy to have regained my loses. Gonna call it a week and avoid trading tomorrow.
Yeah? Well, that's good. Don't revenge trade, but you recouped your losses. That's good. Some good trade up in here on this. I probably could have played it a lot more aggressively if I wasn't dicking around. That's okay. This had to happen eventually, I guess. Okay, so I want to see. Yeah, I think I'm gonna go with these ones. I'm gonna have this and this one. I'm gonna do max level filter of 10. I don't know why I have those input parameters, but okay. Good deal. Oh yeah, you know what else we always add on here is the cumulative delta. Okay. Cool. Feels like something's missing. Maybe it was that I had the CC on that chart. It's fine. Not going to worry about it. Okay, so it did come short of that low there, which interesting enough. Oh man, it's so far above any kind of ATR. I'm surprised the ATR is now more here because they're just swiping through positions over and over again. Now, it is interesting. Why is the Treasury
says my lower
complex
back is
moving
exploding.
low?
Nuclear power.
So if everybody thinks that the Federal Reserve is going to be easy money forever, why are the treasuries selling? Why? Hmm? Go. This all very interesting, isn't it? So, I mean, we're holding the area that we got to yesterday. At the moment, though, all that suggests is maybe we've priced it in correctly. You know?
Salim L says Treasury's selling in anticipation of the economic stability as Trump is going to rule over the world.
Maybe. Or maybe just because they think that the economy is really doing quite well. Only bonds go lower for now, pricing limited inflation.
Salim L says it's starting to do well. Salim L says by COVID standards.
The dollar is strengthening, guys. Who had that one on their scorecard today?
Makina says look at DXY.
Yeah, the Dixie is like 93.2 right now.
Ray Sizzle says are you looking for strength of the USD?
Yeah, the dollar is getting strong. Now, the equity market's still liking it. So, I don't know. Oh, that's because I'm not. What is the 3K resolution again? 2560. 2560 divided by 3 is 853.
Vlad Stolyarov says volatility is back.
This is really quite all over the place, isn't it? Okay. Okay, apparently before I was doing these on the one range, so let's fix that. And then over here, I'm going to add these two indicators. Um,
MISS's says SEFT. Vlad Stolyarov says 9 buy programs 11 sells. Vlad Stolyarov says much more active day yesterday was no programs.
hmm.
MISS's says are you a trader, do you live from this professionally?
I don't live from it, no.
Vlad Stolyarov says you can see it on volume stew.
I still have a day job. And I mean, why not? I only have to trade like the first 2 hours.
Makina says DXY gonna fall again.
You think so? Certainly happen. I think I already missed my chance to get back into this again. It would have come back almost 2 hour entry though. So
Vlad Stolyarov says I just wish TSLA would stop rallying all day long.
it is still going. Well, it's probably going to go until they split and maybe even a bit after that. And then it really comes down to whether it gets put in the index or not. Can you imagine if it doesn't actually make it into the index? Oh man. Okay. So I'm feeling a bit more comfortable here. Kind of wondering, there was something else I feel like I had on this chart, but I don't know what. Guess on this chart, I've got to fix up these indicators so that they don't actually.
Salim L says if I had money, I would shoot my lower back with a shotgun.
What? Is that bad, huh? Make sure you have a good chair. Let's make this. Okay.
Vlad Stolyarov says UVXY keeps on rising plus 4%. Vlad Stolyarov says means we on roller coaster.
There we go. I just really hate that NinjaTrader by default puts that stupid label on everything because it's just so distracting to me. Especially ones that go on the main chart, you know? All right.
Vlad Stolyarov says JPM up big today banks.
Ooh, that one took off right there.
Vlad Stolyarov says NQ squeezing up. Vlad Stolyarov says those candles are crazy.
Yeah. Some of the action in through here was a little dramatic, let's say.
Salim L says almost got run over by a truck on NQ. Don't do this at home. HHH.
Better.
Vlad Stolyarov says slightly smiling face I will let them have the highs today.
Or did they close? Is that is the high? Yeah, it is. Interesting. Very interesting. I don't know though. The way this is looking. Ooh. Okay, so if they don't get this high, ooh, watch out. Be really careful about if they don't get the high. Okay, we got another problem here, which is that I need the indicator to
Makina says why not use TradingView?
forward looking. Why would I use TradingView?
Salim L says Vlad get in on NQ for 15 minutes.
Hmm. So why aren't those ones? If I refresh this one, will it be saving?
Vlad Stolyarov says S3508 probably hits today.
Well, I have 3510. Yeah. I'll be right back. I got some water.
Vlad Stolyarov says if we don't break channel up. Vlad Stolyarov says one thing I like about this today volumes are back and volatility is up somewhat.
Okay, that's pretty good. Yeah, I really feel bad because I really should be long here, but I just didn't. Volatility is back somewhat. Uh, I mean, what we were getting before I thought was pretty standard volatility, and I was okay with it, but at least in terms of how far it was moving. So the TikTok CEO is resigning as part of the deal? Hmm. Well, they did make a new high. It's a little bit, hmm, it wasn't by a lot. So I need to come over here and look at yesterday's video. What else did I have on that? Let's see if I can find a spot where I actually was showing the other screen, though.
Vlad Stolyarov says now that the volumes are back, I can finally refer to dollar tick for changes in direction.
Ah. No, that was it. I think part of it is that when the range gets this wide, the whole ATR trend indicator isn't very effective.
Salim L says Vlad, you ain't got no tick, don't worry. Vlad Stolyarov says MSFT only 230. Ray Sizzle says, do you trade cryptocurrencies? Vlad Stolyarov says, I stay away from bad ticks.
So, I definitely watch the cryptocurrencies, but overall, I wouldn't really recommend day trading cryptocurrencies. The moves there are way too, like uh, y- just some rich guy felt like doing something, So it's not really a good trade.
Salim L says bad ticks, ha 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 ha, like toxic masculinity. Vlad Stolyarov says TSLA still got to announce cybernetic Neuralink tomorrow, last bullet to pump it.
How was I doing that? Maybe it was just a cumulative delta with the never reset. Yeah, it must have been. Oh, no, that one actually worked. Hmm. Yeah, Bitcoin did move quite a bit off of that news, but like, look, it came back pretty quickly there.
Why Trader says, hey guys.
Hello. Hey, how have you been? It's been a while since I've heard from you. Okay. I think I got this thing the way I want it. I think I fixed my workspace problems. Yeah, it was long overdue, but I think, well, we'll see what happens. But I think the problem was that my chart that I had the dollar index on had a bunch of different series on it, which probably wasn't necessary. And but that's got to be what was killing it. So I think that I can do that, and I can like duplicate a new window, and just, well, let's just get rid of the dollar index on this one, and this one can be 6J. 6J. So that's nice. And we got gold here. And then let's add let's add oil, since we could never really see oil. CL. Oh, they're going down in oil too, huh? Anyways. The way that everything else is trading right now it makes me a little bit concerned about the sustainability
Why Trader
of the
says I am
rally of the
struggling with
E-mini.
learning. I took 3 courses from Axia Futures and don't know which one will suit me. Which is the best? Volume
know.
profiling, footprint, or price ladder order flow?
I haven't taken it, so I honestly don't know. My opinion is that things having to do with fundamentals will help you more, but
Why Trader says I mean which approach is the best?
they're all kind of the same thing.
Why Trader says for you?
For like, it is the thing. I haven't taken Axia's course. I don't know what the difference between them are, or like how good they actually are, or what.
Makina says, what charting software do you use? And does
Yeah.
it have currencies?
Well, so I'm using NinjaTrader 8, and there are currency futures. So I use that. You can chart and trade actual Forex, I believe, but I'm not using that. I'm using the futures. So that's how I'm getting what I've got right now. I didn't have any other currencies, did I? Is there a currency? Well, the Chinese dollar would be nice, but I think it was just the euro, the yen, and the gold that I had up on there. I think that the dollar index will probably alert me to anything else going on.
Salim L says, what's price ladder?
Critical. I think when they talk about the price ladder, they mean the DOM. So I use the DOM. I've never taken their course. I just learned from watching. I probably would be more interested
Trader
in the
says
price
yes, the
ladder
Dom.
one, but I don't know which. Yeah.
Vlad Stolyarov says it's the ladder with prices you climb in on the way up.
Somebody was apparently it's been wares and is floating around, but like it's not torrented and it's like 50 gigabytes or something. So I don't know how people are passing it, but I'm sure that there are a lot of people. If you went into Discord and asked, I
Trader
bet
says
you,
Salim from Morocco.
I bet you that there'd be a
Salim
lot of
says
people.
Dom trading would be interesting.
Hold on. If you went into Discord and asked about it I'm sure that you would probably bump into some people that have taken it, because apparently not only are there a number of people that have actually taken it, but now there's a bunch of people floating around. I mean, I don't know of anybody specifically. I don't want to like imply that I have like direct knowledge of something or anything, but I'm gonna bet you that there's a number of people that have taken it. So stick with price ladder as your basis, layer things on top of that. Gotcha. Well, we could buy it here. Let's try it. Treasury's just getting killed, man. Okay, so I guess it's really a retracement of yesterday's move. Still. There we go. And this should be by handle. Ticks per level. 4. Base period value 60 minutes. Better. Okay, I see. understand now. 7,000 is not a ton, but it is getting stuck in there. Especially since the E-mini is stuck. I trade best days like this on demo with Martingale. Don't do that. Ah. You said that just to trigger me, didn't you? Didn't you? You know what? I need to do this all in a different workspace or something. No, I'm gonna keep it like I've been doing it. CB. Seth, are you on Instagram? I have an Instagram account, but not an official one. Do you guys want me to have one? I don't know what I would post for Speculator Seth stuff on Instagram. I have a TikTok. I posted a few things on TikTok. Did you take any trades today? I've taken 2. And both of them working out pretty well. We've finally gotten to extreme greed on the greed fear index, says Financial Juice. Trading and exchanges from Harris, that goes very well with Anchors. I don't know. I am really, in my opinion, guys, I'm not a huge fan of paying for education, like a ton of money for education courses. I mean, Axie is definitely the most reputable group on that front, but I've never had somebody come to me and say, "Oh man, I learned so much from Axia, and I wouldn't be a profitable trader today if it wasn't." I never, doesn't happen, because you got to remember, like the video that I made for beginners at the beginning of this week, trading is about innovation. So the real key that's going to make you profitable can't come from somebody else. You're going to have to figure it out yourself. You're going to have to create an innovation that nobody else has. Oops. New tab. Sorry, we should put these. We should just be reading these. E-Trader says he downloaded them. I don't know where yet.
Vlad Stolyarov says oil down today interesting. Mike
people were
Salisbury
showing
says,
me
same high
stuff.
trader. Haven't finished them yet. Only price ladder for me so far.
Sunday Driver says, what camera do you use? Movie camera.
Yeah, so I'm using a Canon T6i, which is probably like way far beyond what you would
Vlad
normally use.
Stolyarov says DSLR.
The first thing is that you need a cam link
Vlad
4K.
Stolyarov says I own T2i. It was good with Flash.
Oh, yeah? First thing is you're going to need
Y
it.
Trader says, well, I'll stick to price ladder.
Sunday Driver says I'm thinking of getting a Sony A6100.
Yeah, that would be a good one. For live streaming, that would be a good one. I'm trying to remember the copper. There it is, HD. That's right. So copper, it took a big move up and back down. It's taken a big swing just like everything else with the currencies. This is all super interesting. And oh, what's going on here?
Gary Rich says copper sucks right now.
Doesn't look. It was doing pretty okay a while ago, but now that over the past little while, yeah, you're right. It's kind of been
Mike
crappy.
Salisbury says, Y Trader, have you tried the monthly free TT demo? If you haven't, get on that. That will help you a lot, and make sure you fill out your paperwork. Vlad Stolyarov says S looks like a breakout again. Such a good trap for shorts if doesn't reverse here.
I see what's going on here. Ha. Much better. Now my chart looks much more like what I expected to look like. Should I be doing that on
Trader says TT demo? What is that?
Trading Technologies is a really solid platform. That's what he's talking about.
Vlad Stolyarov says the profit takers don't need to take profits anymore. Vlad Stolyarov says everything just goes up. Vlad Stolyarov says stops 3,488 if it reverses down.
Well,
Mike Salisbury says that's the platform they are teaching you within that course.
They use the TT DOM in that course.
Sunday Driver says market has lost its mind. USD index is green, despite Fed saying everything bad in regards to debt, inflation, and interest rates.
I tried to tell you. I tried to warn you.
Sunday Driver says this market is a bad joke.
Vlad Stolyarov says they hitting it big.
Think
Vlad
about it.
Stolyarov says large sizes.
Okay, so hold on, guys. Think about this for a second. We've known for about a week that this speech was going to happen. And we've known for quite some time that the Federal Reserve was basically talking about average inflation targeting. Now, what is average inflation targeting? That's just saying that, hey, if inflation was running at like 1% for a long time, then maybe it's okay to for us to let it run a little bit more than 2% for a little bit. Okay, that's not actually that dramatic of a change from what they've already done. That's why they're saying it's kind of like an evolution rather than some sort of a complete reform of the system. I think that's very accurate. Okay, so everybody's known for a week now. They're talking about average interest rates, and they're positioning themselves based on what's going to happen with that. If I'm a currency guy, what am I going to do? I don't want to be in the dollar. I'm going to go put it over in the Swiss franc or something like that. and then let him say his thing. And then when it's done, if there's nothing too dramatic, then I can move my money back and I'll be safe. And what do you see happening? I think that what's happening in the currencies makes a little bit of sense. That the event wasn't really as big of a deal as we maybe thought it would be, and you're getting position shuffling as people move the money around. But there doesn't have to be a reason that the dollar index is just going to like completely collapse today. Now, that said, there are a couple of things going on around here that I think are a little bit off. I am in particular surprised at how aggressively the treasuries have pushed down. So does that mean that the treasuries were actually expecting him to say something way more dovish than he did? I don't know. And you say the dollar index composite looks like it's going to be a ripper over 94. Oh yeah, but we're way far away from that. I don't know if they can do that. Like right now we're at 93.2. That's about what we were at yesterday, right? Really, anything over 93.5 will get pretty crazy. Well, now it is time for me to come over here into my footprint chart. Okay. So this, I at the very least need to move up to here. So I'm kind of starting to get a little skeptical about how much oomph they have to keep this going. Yeah, see, that's okay, time to get out, Seth.
Mike Salisbury says, Seth, did you hear Chigurl's USD thoughts? Regarding international dollar demand and reserve shortage, it was quite good.
Are you talking about the interview with Anthony Crudele the other day? Did I have that right? So you guys mentioned it yesterday, didn't you? Forgot about that. Yeah. Yeah, I haven't watched that yet. Anyways, so the other thing is Sunday that you keep saying that just frankly isn't true is that the Fed is not saying that they're pursuing a weak dollar strategy. They haven't said that at all. They've said that their target is to have 2% inflation and they're going to get their target. I don't understand why people get all freaked out. Like, so I was talking to my wife about this yesterday. So I was like, yeah, this is a big deal because they're talking about average inflation targeting and everything. And she's like, they want to create inflation.
Vlad
And I'm like,
Stolarov
well,
says, yeah, it's normal.
There's supposed to be 2% inflation. It's good to have 2% inflation. When it gets too high, then it's bad. But there's always supposed to be a certain amount of inflation, guys. And I really don't understand how this is like the end of society as we know it if the Federal Reserve actually meets their inflation target. You know what I mean? Like it's a big problem that they haven't been meeting their inflation target, guys.
Mike Salisbury says, nah, deflation is natural, lol. Gary Rich says, excuse me, sir, the amount of balance sheet expansion is dollar weakness.
Well, that's true, Gary. You're right. I mean, there are certainly some things going on.
It's going to run over 2%. By definition, that's a weak dollar strategy.
So again, I would reiterate this tweet that we were saying or seeing earlier that when you look over the past 30 years or something like that, that inflation has run as much as 1% above and below that inflation target. So if they go and they get 2.5% or even 3% inflation, that's not the end of the world. Now, Gary's right that the balance sheet is super crazy. But is that really like quote unquote dollar weakness when everybody else is doing it too? Not so sure about that one. So I mean, and then there's this other problem that you got that I think is like really messing people up here, is that if you come in and you say, I'm weak the dollar, okay, cool. I would probably be with you. As in, right now, the dollar is really high and it's really likely to continue moving down. Really likely. Even, here at 93, I think that this will just continue to steadily move down over the months. For sure. But that doesn't mean that it's like the end of the currency, right? So if you're the person that's in here and you think that the end of the dollar is nigh, then you're going to be making money on your trade right now, even though your larger market thesis is crazy. You know what I mean? So now I guess the last thing that I'll say about that is that I am much more focused on the day-to-day flows. So all I can say is that when I look at the day-to-day flows, the market is pricing in that the dollar is high and is going to come down. But I don't see this whole, end of dollar hegemony as we know it kind of thing. Is just not seeing that yet. Some interesting moves, but not the end of the dollar as we know it. No, not seeing it. So, for what it's worth, now, of course, it's not like it's not possible. They will overshoot and inflation will hit 5%. Why? Why will that happen? How do you know that that's what will happen? If you've gone through and done the math and looked at okay, here's what they're going to be doing, and here's their balance sheet, and here's what the interest rate is, and at the current predicted rate of growth, unless they raise interest rates before the amount of time that they say they're going to raise interest rates, then inflation will raise to this certain percentage. You haven't done that. You don't know. You're just kind of feel like that, it will lead to more inflation than they expect. But then that's where it comes back to this other thing, which is, guess what? The longer term fundamentals are still deflationary. These are generational things. These are things that are going to be with us probably until we're retired, right? Is this deflationary environment. So why is it that all that stuff is just going to magically disappear? No, it's not. If the Federal Reserve were to continue the same policies that they had done the last 10 years, then you're going to get the same result. You're going to have inflation consistently underrun the target. Rand Squawk has this. They were showing this poll where they're saying what happens first: the Federal Reserve hikes rates or the Spurs win the league. And I guess the Spurs must be a soccer team.
Sunday Driver says Black Swan event coming. I can feel it in my bones.
Well, okay. I can't trade it out. Do you want to trade off of your bones? I should have put that in my survey. I had in there guessing and intuition, but I don't think that we had feel it. I can feel it in my bones. SA Spurs or Tottenham. I'm not sure which one they're talking about, but from the way they're talking about it, I assume that football team is really, really bad.
Mike Salisbury says, Seth, one day when you have time, I would love to hear your macro explanation of why gold and silver hyperinflationist camp have it wrong. I have this lean as well, but cannot verbalize this well.
Well, I mean, we've discussed this a little bit before, but I can try going into it again, and that is the big thing that I always think when I see people talk about gold is that when I first came into the market, um, everybody was talking about gold. I mean, and this was just after the financial crisis and everything. And I remember people were saying at the depths of the financial crisis, "Oh, get long gold. The world's coming to an end." And everybody was kind of like, "Well, the Federal Reserve stepped in and fixed things, so we're not so sure that it's like really a huge deal." And then the deflationary environment thing kind of started to come in, right? So gold went up. Because people, like, you remember that in the 2008 days, it was a hated rally. Not as hated as this one is, but it was a good year or so before people really recognized that we were in a bull market. And it was even more than that, because then, like, we had the Eurozone crisis, and everybody was like, "Okay, man, this is like it's going to happen now, the end of the world." And like, we were down, there was some, it was in my opinion, it was a bear market, but it didn't hit any of the technical qualifications that the news uses to call it a bear market, right? But it was bad, so during those times, gold was up and everybody was saying, "Yep, see, it's just going to keep getting worse and everybody's going to buy gold." And then it was like, I just wasn't paying attention to it. It was like, you didn't hear about it on the news as often. You weren't thinking about it. And then one day, a year later after that, so like it's like 2010 by this point, right? Was it 2010? I need to pull up a chart and make sure I've got my time frame correct here. Gold on a weekly time frame. Yes, that's right. Oh, it was well past that. So it was about, yeah, so it was about 2011, 2012 when there was a little bit of volatility and so forth. Okay, so there was the late 2011. And then I remember looking at it again, like by 2014, 2015, when we started having like the taper tantrum and things like that. And I looked at gold and it was like, it had lost half of when everybody was trying to buy it and stuff. So this is where I'm like, these guys all got in on this thesis that really didn't turn out. Like, frankly, it just didn't turn out. And it wasn't until 2018, I guess, when we started having some of these economic troubles and the Federal Reserve had to raise interest rates that we saw gold move up. And even then, I really think that if it had not been for the financial crisis, gold would probably still be close to 1,500. You know what I mean? So that's where I just come into this, like, maybe on a 30-year time frame, maybe you could argue that gold will be higher. And I think that would match up with what we saw is that, if you had bought at the beginning of the financial crisis and you had held it till now, then yeah, you would have made money. But I kind of feel like in the next 3 to 5 years, I'm not so sure that that's a super amazing trade. But more so to the point that the trade thesis that people are making when they make that trade, or that they always tell me, is, "Oh, we need to get into gold because the dollar's hegemony is at an end and the dollar is going to collapse and yada, yada, yada." It's probably not. Or we're going to have hyperinflation, and probably not. It's going to be funny. Well, it won't be funny at all. It'll be really disappointing, frankly, but maybe it'll be ironic if after all of this stuff that the Federal Reserve is doing, they still don't hit their inflation targets. Because, like, seriously, the low rates are deflationary as far as I can tell. I mean, there's a really good study out about this, and I think a lot of people are starting to take note. Low rates forces people to invest, which means less consumption, which means that you don't get the growth, which means that you continue to have the deflationary environment because you still have the output gap. So I still say I think that I'm more concerned about deflation still. Not in the very, very short term, but over the next 5 years, I'm still concerned about deflation. Make sense? Was that a good enough one? And Gary says he's not correct on Bitcoin and gold. I have the answer. Okay, whatever. I've been pretty damn good on Bitcoin, but Bitcoin just ain't telling me anything lately. In fact, man, I look back on the trades in gold that like I actually made. Fucking amazing. Legendary. In my own mind, it was legendary. But then it was like it just doesn't give you any entries anymore. So like if I just sit out and it finally gives me an entry in Bitcoin, if it really does work out that way, I'm gonna look like a genius. But I'm starting to worry that it's just never going to happen. That the people in Bitcoin, that there's just too much hype and it's never going to come down to a reasonable value.
Mike Salisbury says Rich PTJ has been loading up on BTC. I think these guys have it too for the next few years.
Sorry, are we talking about what is this name? Portnoy? No, what are you talking about then? Well, we're not going to see a 0.001 to 10K move again in Bitcoin. No way. No. Yeah, you're right. And you know what? The thing that's so sad about it was I was looking when Bitcoin was released. I was like, well, it might be interesting to go and mine it. But then I said to myself, well, no, because this thing is like destined to just be a bubble machine. So, and I don't know how to deal with that. So I might as well just not bother with it because I just don't know enough to do it. And the reality is that I could have gotten into it, and I don't know. Maybe it was a good thing because maybe I would have traded that and think that I was a genius, and then started doing other trading that was really poor, and I wouldn't have come to some of the more fundamental truths that I think you need to get to. But it was like I had the chance. And it wasn't until this was like really the third run that I was finally like, okay, I think that I can understand this better than the people that are actually actively trading this. And so in the 2018 run, I traded it, and you know what? I was right. I did understand it better than all of the people. I called the top almost to the point, and I was able to get out before that point, and then I was able to make money when it came down and came back up. And I still post the notes every day, just in case you're interested in cryptocurrencies. If you go into the video description below, I have a Patreon where for $5 a month you can see the valuation model that I use to value Bitcoin, and just my thoughts on what the market positioning and short-term trading might hold in store. But again, the indicator has basically just been saying that they're overbought for a very, very long time, and that it's likely that Tether is manipulating price.
Sunday Driver says the fact that Tesla is running like this tells you that this market is crazy and making no sense.
Well, so here's a thought. Is this market particularly crazy? I don't know. Maybe, because there's all these retail people in there, and they do seem to be pretty clueless. But at the same time, seems to me like stuff like that just tends to happen in markets, you know? Maybe, now, I think that Tesla's going to have a reckoning at some point, but the timing is just not right. Like, until the stock is split and everything, I just don't see where that happens, you know. Calling tops and bottoms are foolish arrogance? Well, you can say that, but I've done it and I've been successful with it in Bitcoin. So it called the 2018 top, it called the 2019 top and bottom, frankly. Actually, if you, not from the metrics that I was using, but it did show you a potential spot where you could have taken it long here when we were back at like 6,000, I think it was. And yeah, it's been effective at it. And you know what? It's because there's real fundamentals to it. Just buy some Bitcoin, cold store it, and be happy when it's 100K in a few years. Well, I don't know if it's ever going to be like the super crazy. The problem with so here's another thing is that, you know, maybe Bitcoin as a really long-term investment would be a good thing. And of course, you always want to try and get a good entry price and stuff. But there's a fundamental issue with Bitcoin right now because they refuse to increase the block size. I'm not sure that it can ever be worth more than $20,000. Well, poke my butt and call me sweetie. I'll give you my money to manage. If you guys want to start a hedge fund with my Bitcoin trading strategy, I'd be 100% into it. 100% into it. I believe in the model that much. It has all of the requisite things. It back tests, it forward tests, is based on fundamentals. I would, but alas, I just have to put my own money into it. Meanwhile, what was I saying? Oh yeah, Bitcoin, maybe it's a long-term thing, but you're never going to get like a really, really crazy move off of it, right? So that's why I kind of am a little bit more interested in shitcoins and stuff, right? Like, if Bitcoin is limited at 20K, I'm really starting to think that the Ethereum flipping is going to happen at some point. I really do. Except for that Ethereum also ended up having technical difficulties moving over to Ethereum 2.0 when they're staking it. I'm not a huge fan of their staking. Okay. Bitcoin Cash. Well, I really like Bitcoin Cash, and I think that it's more true to what Bitcoin was supposed to be. But they keep having community problems. I will say the BTC crowd is too focused on Satoshi's original vision. I don't know, man. Like, the Bitcoin core is just not Satoshi's original vision, though. Satoshi certainly didn't want to have the block size limited. I'll tell you that much. I remember that quite well. When it came out, the whole argument was that it wasn't going to be able to scale because of the 1 megabyte block size limit. And people said, well, we can increase it. And by the time that we have to increase it, there will be larger internet connections available and you'll be able to download gigabytes. And at the time I was like, well, okay, we'll see if that actually happens. But you know what? They were right. The internet did scale enough that it handles it. Like Bitcoin Cash handles it like a champ. And yet the Bitcoin core refuses to do it. But you know why? And this is like the whole thing. This is why I think that the model is so brilliant, is that the fundamental view of a currency as the Bitcoin core hodlers envision it is wrong. The idea of Bitcoin as a store of value is total nonsense. Something doesn't have a store of value unless it's actually used, unless people actually have like a reason to use it. If everybody just takes Bitcoin and just holds it forever and they don't actually transact with it, then it's worthless. Well, I mean, it's just not worth as much. And so they're doing all this stuff thinking, if we just prevent people from being able to pull their money back out of Bitcoin, then it will just always go up. You just have to hold it. And that's not true. The more it gets used, the more utility it has, the more it is worth. If they did not have that one block size limit, Bitcoin would probably be worth 3 times what it is today. Because people, for instance, I recently moved, I had to make a wire transfer, and it's $15 for a wire transfer. And if Bitcoin was actually like usable, I could transfer it with Bitcoin for practically free. But guess what? No reasonable business wants to transact with it anymore because of this freaking block size limit. So you get stuck in this thing where it's like you've made all this money from it, but you can't actually transfer it to your wallet because you have to pay a fee. And the fee ends up being more than the $15 that it costs for a wire transfer. Man. Well, Ray Sizzle says Lightning Network may solve the block size. There may be soft solutions instead of changing the protocol. Ethereum needs 2.0, otherwise DeFi cannot function properly. So I don't know a whole lot about DeFi, but to the point of the Lightning Network, I've been hearing Lightning Network for like 4 years now. And as I think that the reality with Lightning Network is that the implementation and what is required from the consumer is so complicated that Lightning Network is basically a joke. I mean, I really thought that the Bitcoin guys had given up on Lightning Network, but maybe not. And then again, here's the thing is that because it's not getting used, it's actually worth less now than it was worth in 2018 by my calculations. But there's been all of the tether has been pumped into it. So if tether ends up to really truly be a scam and the New York Attorney General shuts the whole thing down, it would be ugly. We haven't talked about Bitcoin in a while, so that felt good. Bitcoin is not being used because they aren't making a wallet that is worth a damn. I've used some wallets that were okay. No, you know what? So I use Garlic Coin. Remember, we're still trying to get the Garlic Coin. By the way, they've been doing well. Let's see where they're at. But the wallet for it, it's not great, but I was able to figure it out and use it and transfer money to people and stuff. And my understanding is that the Bitcoin wallets are way better. So coinmarketcap.com. GRLC. I'm actually starting to get pretty excited about Garlic Coin, if I'm honest with you. So if I can show you here. So Garlic Coin came out, big deal, started out trading at $1, which is like, what? Let's get rid of the market cap and the price in Bitcoin and all that so that we just see the price. Okay. So it actually, in some places, people were going for $2, which at the time I was like, this is ridiculous. It's not worth more than 50 cents based off of how much you can make from mining it. So, of course, that got arbitraged out. And then when it did, all of the people that were in it were like, oh no. And Bitcoin had been bailing too anyways. And so they all just completely bailed, right? And then there was all this nonsense with like that the original creators of it were basically doing it as a scam and yada, 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 yada. Okay, fast forward to, the past month or so. And of course, we always get these spikes, but now we're actually getting some sustained price movement. Now, part of it is because Garlic Coin is halved. So, yeah, the whole thing is super interesting. But man, if a garlic coin ever got back up to like $1, let's just say, or if it ever reached its full potential, which I calculate its full potential, it could maybe be worth $70. Yeah, super exciting for me because I own a lot of. I mine. I mine it all. I mined a lot of garlic coin. I should probably go back to mining it because my pool went down, so I stopped mining it. And I should get back to that. In an age of why bring all this finite resource cryptocurrencies? We already have gold for that. Crypto, as they stand, it is bad. Maybe. Well, I think Plan B that probably what is going to happen is that the Federal Reserve is going to make a dollar-backed cryptocurrency that not only allows the government to directly deposit money to you or for you to directly pay taxes. Basically, it would allow you to like skip banks altogether. You could hold all of your money in your cryptocurrency wallet and you could transfer money and there would be no need for all these wire transfers and all of that stuff. And at that point, the whole point of a cryptocurrency kind of falls apart. Only except for that you want to have contracts. Now, if the Federal Reserve's coin has contracts like Ethereum, then it's really like, ooh, why do you want to be in the cryptocurrency sphere? Well, you want to be in the cryptocurrency sphere because you don't want to be attached to a government-controlled currency. And there's always going to be a group of people that want that and are trying to make that sort of a thing happen. But it will probably always be on the fringe. They're not going to let deflationary currencies survive. Yeah. Well, like, frankly, a deflationary currency, if the world economy was based on a deflationary economy, that would be such a disaster. Can you imagine what would have happened during this pandemic if we had a deflationary currency, and they weren't able to come in and inflate the market? It would be a depression at the very least, right? We would be in a depression at the very least. So I think that the cryptocurrency people understand that. That's why they were doing all these contracts that actually did have like borrowing and were, counter-cyclical and inflationary, actually. Yeah, it would be bad. Yeah, it would be really bad. I missed this one. Satoshi did specify a block size, did he not? Not quite. So what happened was there was no limit. And then there was an attack. And this attack essentially was where they put some really big thing in there. So like they were able to take up the whole block with this message or something like that. And then because there was no limit, it was making these really huge blocks, and that was screwing everybody up. So Satoshi went in and he put a limit. He said 1 megabyte is more than large enough for what we need right now, and in the future we can increase it. And like he literally he told everybody this, and like there's many forum posts where he says this. There's no question about it that, well, I shouldn't say that because I remember there being a really huge argument over it at the time that Bitcoin Cash split. But from my research, it seems very, very clear that Satoshi intended that the block size would increase. I think that Bitcoin Cash is much more the Bitcoin that Bitcoin was originally. So many of the big players and the community feeling and the attitudes and everything around it, they moved to Bitcoin Cash. And Bitcoin Core is basically Bitcoin Core themselves and then a bunch of money chasers, clueless people that don't really know what's going on. That's my opinion. But then the problem is that Bitcoin Cash then started to become attacked, where like there's like 3 wallets involved in that, and they've been arguing amongst themselves, and it's a total mess. The community as a whole always seems to know what they want to do, but that doesn't stop the drama. I don't know what the deal. A lot of people are saying that they're like attacks to try and infiltrate, or whatever. Maybe. So I find it interesting here on my little chart. So now that I've got my indicators fixed up and a little bit and everything, you're just noticing that the overall liquidity, when I look at everything that I can look at, is always bid. It's always more orders on the bid.
Anthony K says, hi Seth, I am trying to load the multi-period candles to 5M chart style on NT8. I don't have that option. Do I need to have paid subscription to have that?
Oh, okay. So if you just installed the multi-period candles indicator, you probably need to restart NinjaTrader for it to show up as an option under the data properties screen. That's probably what's going on. Oh, you know what? While we were yapping there, I missed a good opportunity. Did it really get to 84? I could have bought it here. That's okay. I mean, I already took two good trades today, right? Or wait. Yeah, I did. I'm happy. Where do I download that? Oh, no, yeah, the multi-period candles. So I have the video about it, and on the video there's a link to the download. You have to go. It's in the downloads channel of Discord. You get the multi-period candles, install it, and then restart NinjaTrader. Multi-period candles is something that I wrote. Yeah, no problem, Anthony. Anytime. That's why we're here. Okay, the Treasury is kind of recovering a bit. I do find this. I do find some of this action in the Treasury is a little peculiar. I can see that oil has recovered. Ugh. Oil has recovered. Gold kind of really didn't. They're kind of sitting down towards that lower end of 19, unfortunately. Is 3,500 in the cards today? So it is certainly within the volatility range possibilities. That said, it seems to me that the market is somewhat disappointed in that they're not really getting like the really most of this was priced in. So we're so close to 3,500 though. We're so close. I bet you they make it at 3,500. And like I said, like the VIX target above us is 3,510. Anything's possible. When you look at the 5-minute chart, yeah, it's a pretty solid uptrend. It's hit the top of that 4 times, and it's hit the bottom of that 4 times, and it looks like they're heading up and that they're going to go and make a new high. They're not getting anywhere close to where they would just like straight up stop out everybody. I don't see the shorts increasing here at all. So it seems to me that we're in a position where they can just keep going up. Yep. So today's video should be Powell speaks at Jackson Hole Conference. And did I get the date correct? It says 27th. Yes. Is this why VIX is your main internal indicator? Not necessarily. I just have. I think that the reason the VIX is so effective is because it's based on actual real positions that people have taken. You know, you're basically looking at positions and seeing how much volatility people are expecting to have happen. So there's not the relation between implied volatility and realized volatility is very tenuous and quite random in reality, but there's enough of a connection there that you can make a pretty good judge based off of how the day is going, where we're going to get to once you know where the VIX targets are, right? Because then you can go and you can say, well, the VIX target is here. We had a pretty okay reaction to the news or to Powell, so we should be able to just go up to the VIX target. Probably 35.10. We'll see. I will see you guys tomorrow, though. In the meantime, stay profitable.